Hi, I'm John Cunningham. I'd like to spend the next 2 or 3 minutes talking about the basics of LLC tax, the facts about LLC tax, which I think not just lawyers and accountants, but business people too should know about. Okay, there are two basic types of LLCs, of course, single member LLCs with one owner called a member, and multi-member LLCs with two or more members. If you're a single member LLC, there's three federal tax regimens potentially available to you. They are sole proprietorships, single shareholder S corporations, and single shareholder C corporations. One of those three is going to be best for you. It will usually be sole proprietorship taxation. You can't get sole proprietorship taxation if your business is a state law business corporation. But you can get any kind of tax, basically, if you're a single member LLC, any kind that you might need: sole proprietorship, single shareholder S corporation, single shareholder C corporation. If your LLC is a multi-member LLC, you can get partnership taxation, which, believe it or not, is very similar to sole proprietorship taxation. You can get multi-shareholder S corporation taxation, and you can get multi-shareholder C corporation. And the big challenge at the formation of every LLC is what tax professionals call tax choice of entity. Which is the best federal tax regimen of the several that I've just mentioned for my client in this LLC, both from a federal income tax viewpoint and from a social security tax viewpoint. And sometimes the answers to those two questions, federal income tax and social security tax, conflict. But you do this process called tax choice of entity, sometimes a very complex process. For example, sometimes it's very demanding to figure out, should this be a partnership under the 700s of the Internal Revenue Code, or should it be an S corporation under the 1300s of the Internal Revenue Code for federal income tax purposes? Not often an easy question to resolve. And as far as Social Security, people don't generally think of LLCs, either single member or multi-member, as properly being S corps. But in fact, Subchapter S is a great way to lawfully minimize your Social Security taxes if that's what you want to do. Tough decision sometimes, but that's what Subchapter S makes possible. But it's a little known fact that you can do the same thing with partnerships and sole proprietorships using a little known but powerful proposed Internal Revenue Service regulation. I'll give you the designation. It's 1.1402A-2, which can, if you want, save you a lot of Social Security taxes when you're an LLC. So you've got this understanding that single-member LLCs can get one set of regimens, multi-member LLCs can get another set of regimens. Tax choice of entity is how you choose which is the best regimen. But now a dramatic new factor has appeared. It's called New Internal Revenue Code Section 199A. Basically, it provides a federal income tax deduction from your share of business income of 20%, and I think sometimes even more than 20%, can save you thousands of dollars of taxes every year. And it kind of supersedes traditional tax choice of entity, because now the issue is, hey, which of these regimens is going to give me the best 199A deduction? I'll be talking about that in a separate video, but suffice it to say that the whole business of LLC tax has radically changed because of the advent, effective 1/1/18, of new Internal Revenue Code 199A. That's the essence of LLC taxation. I've written at great length about all the issues of LLC taxation in my book published by Wolters Kluwer, called Drafting Limited Liability Company Operating Agreements. I've written another book also published by Wolters Kluwer called maximizing pass-through deductions under new Internal Revenue Code 199A. If you want to look at those books, you can learn more about these subjects. I would also welcome a call. Thank you.